This is the crypto mile.
The United States, but a huge negative, at least in the short term, for the United States.
So yeah, that just brings us to the combination of restructuring the debt, going to international bondholders of US Treasuries and saying to them, we're going to have to restructure this. You're going to have to take a hit. Internally, you're going to have to take a hit. If this doesn't happen, we could see hyperinflation. But then let's bring in what happens with gold, what happens with stores of value in this environment, in this macroeconomic environment.
Well, I think no matter what, gold's going up. I mean, obviously, under hyperinflation, that's when it goes up the most.
Yeah.
And I hope that we avoid that. I mean, I own a lot of gold and gold stocks, so I would personally benefit as an investor from that. But I don't want that to happen. You know, I would prefer an alternative course. But even devaluation default, I think, is going to be bullish for gold. Because I think gold is going to emerge either way as the preeminent store of value safe haven. And I think that the dollar's status as the reserve currency is going to be lost.
Okay.
And then the question is, what is going to replace it? And a lot of people think that the dollar status is not at jeopardy because they don't see a viable alternative, but they're looking in the wrong place. They're looking at sterling, or they're looking at the euro, or they're looking at the yen or the RMB, and they're saying, hey, those currencies aren't ready to be the reserve. And I would agree.
Right.
We don't need another fiat currency to act as a reserve. We need real money. We need gold. Gold was the reserve for all currencies prior to Bretton Woods. And even after Bretton Woods, when the dollar was the reserve, it was only a reserve because it was backed and redeemable in gold. In fact, the dollar was defined as a weight in gold. That's why it was considered as good as gold. So we've really only been on a fiat standard since 1971. So, about 50 years, a little bit more.
That was only meant to be temporary, Nixon's gold shock.
Oh, initially, sure.
Okay,
sure.
so it still could be temporary, only it lasted years.
Yes. Well, if we were to go back on the gold standard, the question is, would the world trust us?
Right.
Because we already screwed them over once. In fact, when we talked about the debt ceiling, and everybody said America has never defaulted on its commitments, that was a lie. Because Federal Reserve notes were obligations to pay gold. And up until 1971, if you were in Britain and you had $35, you could get an ounce of gold. That was the commitment that we made to the world. And then we defaulted on that, and we gave them nothing. It wasn't just that we gave them 50 cents on the dollar, right? Or we didn't say, okay, we'll give you half an ounce of gold for your $35. We'll give you no gold. It was a complete default. So I don't think any one country should be able to issue a reserve. I think that the real reserve should be gold. And we should all be on a level playing field. If you want gold, you have to earn it. So either you have to mine it, or you have to produce something that you could trade for the gold that somebody else mined. But we need an honest monetary system that keeps governments in check. Because if we had sound money, we wouldn't have all this inflation. We wouldn't have all these budget deficits because they're not possible under a sound monetary system.
So are you suggesting multiple gold-backed currencies across the world?
They should all be gold-backed.